Hey guys, this is Stephen Buis from thehappyprofits.com, where we show you that we're the right place to learn how to place the right trade. Also FOMO NOMO on Telegram, and we have our own chat room, so reach out if you need to, and let's get busy today. So we have the Law 7, which is the 25 laws of trading during the 25 days of Christmas, so I just wanted to help you all out. I know you've probably heard these over and over again, but sometimes it's better from a trader that has lived it. So I'm going to give you some real examples as well, because I think that's very important. And if you need more details, reach out for a private lesson or a group lesson. We have those pretty often, one group lesson a month, and a private at any time you want. They go over your skills and then also show you our trading system that works pretty good. So Law 7 of the 25 laws of day trading is called Size Matters. Now, obviously, it does. Even for the ladies and even for the men. Sorry, bad joke. But did you know that a single trading decision influenced is not just by price, action, or indicators? It is simply just by the size of your position can make or break a day trader's career. If you ignore the importance of a position size, then you might find yourself seriously with some drawdowns of a single trade gone wrong. So if you don't have your trading plan and all that, that's also part of it. So basically what goes on over and over again, you're going to find yourself that you want to thrive within limits. Some of these limits are 2 to 5% of your account. So let's just take some real worlds. They have little calculators. You eventually want to get your sweet spot of success. So if your down draw is 20 cents and you're willing to say, okay, I want to lose $20, then it's 100 shares. That's pretty easy to calculate. 100 shares at 20 cent loss. 100 shares minus 20 cents times 100 is 20. And then if you're willing to go $200, and that's what you're willing to lose, hopefully to gain the same amount, which is a 1-to-1 ratio, and or just sitting there getting 2-to-1, which is I'm willing to make 400, but I have to give up the risk of losing 200. So try to thrive with limits. If I trade with a $40,000 account every day, I have my limits. Mine is usually 30 cents depending on what share it is. If I'm in a $30 stock, obviously I have to change that stop loss based on price fluctuation. So basically 2 to 5% is what you should be looking at. So again, if you have $1,000, you're willing to lose 2%. So 2% of 1,000 is what you just already calculated, which is 10%, which is 200. And then 10% of 10% or one of that is definitely $2. So you're willing to make $4 to lose $2, and that's what you look at. So you're looking at 20 or 40, and then you have to share your share size. So if you're trying to make 30 cents on a profit, you're willing to lose 20 cents on the downtrend, and that is going to be your proper position size. So I do apologize for that. So eventually you're going to basically have a risk on every trade, and risk management is just protecting your capital from big losses. Yesterday they had 2 stocks that ran really well. We traded them all along, and then we find out about a shorting room that we usually have some traders that are both sides. I don't short because I don't like those. I have a stop loss, so I do not care. But I do not like shorting because sometimes it's just too much time management. I'm not in here for time management. I'm in here just trying to find my speed. My speed is a little fast, and I can trade even consolidation pretty cleanly. So, and then also the larger breakouts, and then just pivot points where they're basing and stabilizing and then re-breaking. That's my favorite trade, called a reverse trend. So when it stops trending down and I'm looking for the trend up with confirmation, that's usually what I'm looking for. But if you manage your risk, you'll have capital the next day to make profit. So what is your daily risk? So let's say your daily risk is $100. Well, $100 is going to get you something. And what you're going to do by doing that $100 is you're going to sit there and you have to set risk for other things. You can't be sitting there. There's a couple traders on YouTube that, I kind of like. They're trying to show you like, hey, the stock's going down and I'm still going to make money. I do that as well. I only make it when it's going up, when it's going down, which are lower lows and lower highs. Well, I can take the lower low to lower high, and there's a trade in there almost every time if you're real keen to it and you're watching the stock very well. But after a while, you're going to realize that you don't want to keep sizing up, what do they call it, averaging out, all that kind of garbage, because you basically had a crappy plan. I mean, Maybe you didn't even have a plan. You're just like, everybody else is getting in. And usually, again, when everybody else is getting in, that's when I'm getting out. There's a couple of Tim Grattani and I think Roland Wolf, he's really good. He basically said, I finally realized that people were shorting when I was entering a stock. That's called a breakout trade that's gone wrong. And then he goes, obviously, because it's resistance. So resistance is basically a price ceiling, and then there's a price trampoline, which is support. And that's what you're looking at. So you basically today, the biggest thing about this law is just saying, I need to manage risk on every trade. I love pre-market. I'm the king of pre-market because I know the little indiscretions of just testing enough and just that. I read tape very well. But after a while, you sit there and go, I don't have a stop loss. You better hold your stop loss. Very true in the pre-market and after hours, because after a while, you're going to realize that there is no take profit stop loss orders in pre and post. So there is a trick we have in Webull that we use to have that. I will show you that if you ever take a private or you want to just see it and you're in our group. I share those trades every day, and I basically answer any questions you got every day on an ongoing basis. And usually people don't ask questions anymore. They kind of know where we're going every day with our community. So again, manage risk on every trade. You might not want to hear it, but if you slowly bleeding out, 2% bleed out is very a lot less than 10s and 20s, and then you have 0. Or those people that didn't set stop loss when a stock started going against them yesterday. They have no accounts now. They might not have a good relationship tonight. I'm sure you told your wife you're losing money. It's probably not going to be a good day for you. Doesn't mean to hide it. You need to admit it. You need to stop adding money to your account except through trading, not adding it by, I made 5,000. No, you put 5,000 in. So make sure you're doing that. Make sure you're doing your daily risk. 2 to 5% of an account of a 40,000 would be, let's say 8,000 is 10%. So 10% of 10% would be that percentage. So $800 is what I'm willing to lose every day. Now, personally, I only want to lose about 100. That's my risk, and I'm looking for 500 to 1,000 every day. That's what I'm looking for. So, hey, y'all have a great day. Just remember the 7th law of trading is size matters, because that's determining your risk as well as your profit. Y'all have a good one. Thank you so much.